you said a little while ago about growth investors versus value investors. So the probability distribution of outcomes in any investment is one of the most important things to think about that I think is not thought of, because outcomes are probabilistic, and oftentimes people will think that one outcome describes the full potential range well, but of course it doesn't. You can't rerun the future a million times to understand what the true probability distribution is. But if you're thinking about shorting, the best you can do is you can double your money by the stock going to zero, or you could potentially be liable for 10x your investment. I mean, GameStop is the perfect example, especially if you're levered, if you have options or something else with inherent leverage. Thinking about that statement in the context of value and growth, it's sort of the same thing. If you're buying a stock that is cheap, and it's cheap because, the market has some anxiety about its future earnings potential, and let's say it's down 50% from the 52-week high. Well, the best you can possibly do is maybe double your money. That sounds like a lot. It is. I'm not going to downplay a double. But think about, you have to be right to get that 2x. And we'll hold aside whether it's easier or harder to be right in value versus growth. But now let's look at growth. If you're right in a growth investment, you can make 10x, you can make 100x. People would say, well, that's so uncommon, to see a business that grows that way. And that might be true. I think that it's becoming more common today than it had been. And, I think that's a whole other discussion. But think about how less frequently you need to be right to offset those times when maybe you're not right, when you are correct in a company that has the potential to scale significantly. You could make one bet, and that's basically venture right there. Or part of a large aspect of the venture mentality is that. Whereas in value, you're looking for something that is the cigar butt, so to speak, which is something that we should talk about. But I also don't really like the growth versus value characterization. It's what's common today, but I think every stock that has future growth can be value, and every stock that is value can also be growth. They go together, but I guess it's just something people like to think in headlines. So that's the headline, value versus growth.